It's been a pretty volatile month for the price of gold. It came into August trading around $1,810 an ounce. Then, of course, we had that massive plunge, August the 8th, down towards 1660. Since then, it's clawed those losses back and more. And we're set to end the month pretty much where it finished. So where next for the price of gold? Are we going to finally see it start moving up through the 1800s? Or actually, is the risk for another sell-off back to those August lows? I know that gold's always a popular market, so I thought we'd do an update. We did, of course, have that vicious sell-off in August for gold, beginning of the second week of August. But it's bounced back again, back up to where it was stuck for much of July, around $1,800 an ounce. So I thought, well, let's do an update and see where the trade might be. We do have a trade running at the moment in gold. So buying on the 8th of August at 1740, the market is currently above 1800. So it's a couple of £100 in profit, that trade. So maybe we'll move the stop loss on that. And in this video, take a look at if there's another trade to do at these levels. So as usual, I'll talk a bit about what's been driving gold. We'll look at the levels to watch, then we'll come back onto the charts and take a look at things in a bit more detail. Hello, I'm David Jones from Capital.com. And as we get into a new month, I thought we'd do an update and an outlook for gold. Lots of volatility in August, although it looks set to be ending the month pretty much where it started. So as usual in this video, I'll talk a bit about what's been going on with the price of gold, the news. We'll look at the big levels to watch, then we'll jump back onto the trading platform and see if there's an opportunity. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different videos on the markets we cover. Plus, of course, every Friday at 2:30 UK time, I now run a live stream direct from our YouTube channel where we look at lots of different markets, including gold. Right, let's get into it and have a look at gold in a bit more detail. So we did have an exciting first half of August. We saw what was effectively, I think, a flash crash in the price of gold on the 8th of August, where we saw the price lose about $100 in under an hour. This was at the start of the week, Sunday night UK time, as Asian trade got underway, and perhaps that sell-off was exaggerated by the lack of liquidity that we often have as markets open for the week. And we saw perhaps an exaggerated move because since then we have seen the price recover and more those losses. Overall, I think it's still something of a quiet, often sideways markets, with stock markets still up at all-time highs, setting fresh all-time highs on a regular basis. Then the more defensive assets like gold don't have the same sort of appeal. So I think at the moment it may be some time before we see gold get sort of more volatile and hit some of the heights that we saw in 2020. What would change, of course, if inflation became more of a problem as the year goes on. The Federal Reserve, again, in the last week, the US Central Bank has said that it thinks inflation is transitory. It's not going to be higher inflation is not going to be around for very long. They think, so they're not too concerned about that. If they ended up being wrong, we could see the use of gold as an inflation hedge help lift the price. The same goes for stock markets, of course. If we saw a bit more volatility in stock markets and markets sell off deeper than they have over the last 12 months, sell-offs don't last very long at the moment. And if we saw the Federal Reserve perhaps step back from helping to support the economy, that's something that could help the appeal of gold. But for now, not much happening on that side, which I think explains why gold is still being, let's say, neglected by lots of people. But saying all that, I think we have seen an important base formed again or confirmed again down at 1660 with the sell-off that we saw in the first half of the month. So lots of support down there. But also on the upside, where we are now, we've seen gold really struggle above $1,800 an ounce in recent months. And is it starting to struggle again? Is perhaps the opportunity now to go short gold? We'll take a look at the levels in a second and see if there's a trade to do. Let's just have a look at those support and resistance levels to watch. So we saw highs mid-July at $1,834 an ounce. So far, we've seen it trade about $1,823 an ounce. So again, is it getting a little bit nervous up at these levels? If you still wanted to be a buyer, there are support levels left on the way up. The most immediate of these for me comes in from mid-August around $1,770 an ounce. But as usual, let's put some color on these numbers. Let's jump back onto the platform and see what the trade might be at these levels. So let's start things off as usual with the big picture for gold. So this trend in gold has been going for 3 years since the August lows, August 2018 lows. That's the trend line. Of course, the price accelerated from March of last year after coming back near the trend line, and we saw the price move from about 1450 up to the all-time highs around 2075 in August of last year. But since then, it struggled. It did look like it made a base in April of this year. We had a run back up to 1900, and then we had that sharp sell-off in August, which actually shows the trend line had held again. So overall, that 3-year uptrend for gold is still going. So from a longer-term point of view, it's still positive. But if we look at the year so far, you can see it's broadly sideways. We're stuck in what is a pretty broad sideways range. It's struggled in recent months above 1900. We've seen good support, as we saw back in March, in that 1660, 1680 area. So at the moment, with the price trading around 1805, it's somewhat stuck in the middle, I suppose we could say. If we take a look at the RSI down here, the RSI went heavily oversold, not surprising, on that sell-off in early August. With the price recovering, it's dragged the RSI back up, of course, but hasn't gone overbought just yet. So I think it's perhaps a tricky one to call now. I think it's not the most interesting market at the moment either. I think because we have other markets that are moving, like stock markets, for example, where we have clear trends, and clearly in gold, we've just got this sideways trade. I suppose there are a couple of things we could do here. If you wanted to go short gold, you could take the view that yet again, up at these levels, it's running out of steam ahead of what did prove to be quite important short to medium term highs around 1835, the middle of July high. Then it came close to it again in August, trading up to 1831. So with the price within the last day or so having traded above 1820 briefly, you could take the view that once again the rally is running out of steam and go short with stop losses somewhere above, is what I would do, those highs from mid-July. So I think that's one approach if you thought we were going to see the price under pressure. If we flip things over to a shorter term chart, then you could take the view that the trend we've seen forming over the last 3 weeks since that sharp sell-off is still intact. So if you were short-term bullish on gold, you could look to be a buyer, and we'd be looking to see if that trend line holds around 1790, 1800. Clearly lots of support for the price of gold from mid-August, from 1770 through to about 1780. So I think that's an interesting area to watch over the next couple of days. If we did see the price under pressure below 1800, perhaps we see something of a bounce from here. So I think there are arguments for both at the moment. But the trade I'm going to do is nothing. I think sitting on your hands is, of course, a trading decision as well. I'm already long gold from 1770 from the beginning of August with a stop loss in place. From a medium-term point of view, I don't see a decent trend there at the moment, so I'm happy to keep that existing position running and seeing what the next couple of weeks bring. I think if we can get a break above 1840, let's say, then perhaps we see this trend extend and we start targeting 1900, 1920, that sort of area. So I do still think that perhaps we'll see buyers on dips rather than a big sell-off that we saw at the beginning of August. So broadly speaking, I think it's still mildly positive, which is why I'm happy to stick with the long position. But for me at the moment, it's just something of a range-bound, somewhat directionless market in the medium term. So I'll keep that long running, but not add to any new positions and see what develops over the next few weeks. That's it for this update in gold. We'll see how it progresses through September. If it can manage to hang on to 1800 plus for a little bit longer, we'll come back and do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.